प्रेजेंटेड बाय ईबिक्स कैश। हर खुशी के लिए काफी है।
Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the headlines tonight. Markets end marginally higher in choppy trade. Nifty tests 18,300. Auto shines. Pharma drag. On the show, we get you an exclusive conversation with our market guru Samir Arora on where markets are headed and what Dalal Street wants from Budget 22. HCL Tech plunges over 5% as profit dips in Q3. Investors disappointed by the company's margin outlook after wage hikes dented December quarter results. Hero MotoCorp, top Nifty gainer on stake hike in Arthur Energy. Board approves investment of up to 420 crore rupees in Arthur Energy. Benchmark indices continue inching higher slowly with more of a sideways movement as earning numbers look good so far. Nifty moving above 18,300, closing the day up 50 odd points at 18,310. Sensex closed with gains of 93 points at 61,308. We saw a good bounce back in sectors like auto, realty, infra and energy with respective indices there gaining between 1 to 2%. The BFSI, IT and pharma sector underperformed. Top gainers on the Nifty, Hero Moto up 5%, Grasim up 3.5%, ONGC, Tata Motors, Ultratech bringing up the winners list. Shares of Adani Enterprises, Adani Green Energy, Tata Communications, SBI Life Insurance, Astral and Prestige Estate Projects. A long list of stocks hitting an all-time high on the BSE in today's trade. Laggards, HCL Tech down by 5.7%, some disappointment there on earnings. HDFC Bank down by 1.4%, also Cipla, Axis Bank and Britannia. Our global business editor, Udayan Mukherjee, joining us now. Udayan, markets have kicked off the week on a strong note once again. Earnings rolling in thick and fast and things looking upbeat.
Yes, Abha, I think we cannot fault the market this year the way it started off. I mean, it's been such a quick ride and we are almost within kissing distance of the old high of 18,500, 18,600 Nifty. I mean, a couple of good days gets us there. And I think it would have come as a surprise to most people that we are already talking about making a new high 2 weeks into the new year, because the general belief was that this will be a more volatile year, that there's a lot of turbulence going on in the Western world with interest rates, and this is a time for the market to consolidate, even correct. So I don't know whether looking back we'll think at that dart into 16,500 Nifty, that area was the extent of the correction, 8-9% from the top and no more than that. So time will tell if that was all the 10% correction that we saw, or the market is actually pulling back to retest that old high and then we'll see another leg down coinciding with something which happens in the Western world. So it's going to be a fascinating few weeks for the market, not least because the kind of turbulence that we're seeing in the Nasdaq over the last few days. So fingers crossed, but I think the event of the next few days to watch is if the Nifty actually makes a new top just a few months after people had written it off, saying that we are not going to see a new high for many months to come.
All right, so keep an eye on global cues. That's perhaps the one vulnerable area that markets may have to sort of keep in mind as they continue to enjoy this rally or momentum that they're seeing early in the year. Now, with less than 2 weeks to go for the union budget, what does the market expect from the finance minister? Samir Arora of Helios Capital speaks with us on what Dalal Street wants to hear from the budget this time around.
Samir, good to see you on the show again. This time, should there be any expectations from the budget? Or, you know, corporate India has never had it so good with taxes. I mean, on top of that, Is it just enough to say no news is good news? Just don't do anything to rock the boat. We don't need anything from the budget, from a corporate or a stock market point of view this time?
I would think that is a very fair assumption that we don't need anything. But if you read the papers, these guys are still trying for some benefit here, some benefit there on unlisted equities. And sometimes I read that even on COVID expenses or work from home. But generally, I would totally agree that there is no need for any new things to happen. And if anything bad doesn't happen, that will be a good budget.
But what's the general sense about this year, Samir? I mean, you're sitting in America right now, where over the last few days we've seen intense volatility in the technology, high growth technology stocks in the
Right.
Nasdaq. But here things seem to be quite calm in India. I mean, if you had to look forward, are you expecting a lot of volatility this year, or do you think the market's more or less at peace with what is expected and it should not be a very rocky year?
So I think right now it's at peace. The only thing is that the interest rate hike assumptions or forecasts have been going up very rapidly from maybe one a few months ago to now. Recently, I read Goldman Sachs says 4 in this year alone. But even there, if you look at the total cumulative hikes that are forecasted, which are 8 to 9 over 2.5 years, which is 4 in 2022, then 3, and then maybe 2 or 3, that cumulatively adds up to say 2 to 2.5%. And that would only take us back in US to merely back to what it was in 2019 mid, so pre-COVID. So if all other parameters are going up to pre-COVID levels from GDP, unemployment, blah, 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 whatever, then to say that interest rates should not go back to 2.5% by 24, I think it would be too unreasonable. So I would think that in that sense, because currently you are in transition from one era to another. But if you also look at this thing that, long tenured equity where there is a lot of valuation, those are correcting. Actually, if you look at the big 4 or 5 tech companies, they don't have very high valuations. Google or Meta, maybe Amazon has a little bit more, but none of the others would be in the 20s. They would be lower than most consumer companies anywhere in the world also. So I think a little bit of I'm hoping or expecting that it is shorter term, and that these interest rate hikes would be sort of par for the course in terms of from where we've come, and why should it not go back even to pre-19 levels. For India, the only thing is that will
What
they
is your
follow
own...
a little bit?
Yeah, sorry.
No, for India, the only thing was whether India
Go
will
ahead.
also have to maybe preempt or have 1 or 2 interest rate hikes, just because Indian inflation is also high. But actually, Indian inflation these days is lower than US inflation. Indian inflation consumer is below 6 and US is 7. So let's see, that's also a new thing for us in our life to see that.
But how has your positioning changed, Samir, in terms of whether you remain as bullish as you were a few months ago, or has that long short position, in a fund like yours, changed to factor in higher volatility this year?
No, so the first thing is that you may have lower expectations from the market, but that still may not need a change of positioning, because all you want is that the market should have reasonable returns going forward, let's say in the mid-teen range. If you get more, we take it, but we don't get overly excited unless it is very visible that there's an angle to it. So today we are expecting that the market will be positive for this year and be reasonably positive. And therefore our net is in the high 60s range. Our average for the last 16 years is about 62%. Right now it might be 68, 69% because the momentum is there. And that last 5-7% can be cut in any sort of lowering of expectations, or even more if there is a bad thing happening. But right now, as long as you expect that the market will have mid-teen kind of returns, which is what I think is possible, and I can explain, then there's nothing much to change in that sense. The only thing is sometimes with which stocks to short, and pre-budget, you will short some different kind of stocks. But generally this year, we have been shorting only the very high valuation stocks.
Where do you see the spending coming in this year, Samir? There's always calls all around for government spending on capex, and mixed views on that. On one hand, there are reports which suggest areas like railroad power will benefit, and there are other reports that suggest perhaps capex has still been lagging behind, and will the government really have enough room to maneuver and spend as promised?
Actually, what I read very recently, I think it was a Credit Suisse report, if I remember, that the government has not been able to spend as much as the money that they have. So his, which I had not, I mean, I don't focus on these things day to day, but they said that 2% of, sorry, the Reserve Bank of India has some $60 billion or 2% of India's GDP in cash, which is lying on account of the government money, which is there, for which the projects may not be ready, or maybe the spending is not on yet. And the idea was that there is enough room to spend even the money that you have already have in your pocket. So I think the issue here might be that the projects are not ready to absorb this much money. Instead of just saying that the government does not have money, simply because the government's fiscal deficit target is quite high if you don't look at it compared to the COVID time, but the pre-COVID time, to have 6 point whatever 8% kind of thing, when we used to have 3.5% before. There is enough room if we accept, or the markets accept, that you are going to only go down gradually and not go back to pre-COVID soon. The thing is whether there are projects which can absorb this kind of money. Right now, it seems that that is the problem.
You said something interesting, Samir, just now, that you look at stocks which you can short before the budget. So were you alluding to names like, say, tobacco, which usually get a kind of a whipping before the budget? Or is it like the Asian paints variety, which are expensive, which you also spoke about?
Yeah. So the thing is that previously we used to short tobacco. Now we have stopped because the stock hasn't moved up for many years. So even if they disappoint, I don't think it's falling few percent here or there. What I meant was sometimes in these sectors where manufacturing or infra, which in the olden days, we would, go long, saying that, if you remember, we used to have this great railway budget, and they would talk about security, spending on railways and switching systems, and everybody would start looking around. Now, actually, just to tell you the truth, this time I will not even be seeing the budget, because I'll be in a flight from New York to Singapore on that day. And later on, I realized that was the budget day. And we concluded as a company and 2-3 other friends that it was not worth spending $500 for 2 tickets to change to be able to see the budget.
Oh, that tells us what you think of it.
That tells you.
But let me ask you about one sector which you have always been a fan of, Samir, which is the sector of the last few months, actually, IT. You know, they used to trade at 18-20p multiples, 18, and all of a sudden over the last 2 quarters, I mean, or last one, and they've come up to some 35p multiples. So how, 30 then, how are you approaching this newfound confidence or growth optimism in IT?
No, so the thing is, that's what I said, the point is whether on a relative to India, relative to the world, in terms of comparing it to other similar stable compounders, longer term, say consumer staples. The thing is your return expectations might change, but it still might be in the top 1/3 of Indian stocks. Like it's like HDFC Bank kind of story. You may say it is not the best bank, but if you have to choose 25 stocks in India, you will still choose HDFC Bank because you know that in the end it will do well. I mean, for us, it's one of our top holdings. What I mean by that is that IT, your expectations of return might be lower, but they are currently in a sweet spot where you see that revenue growth for Infosys is in the order of 20% per year-on-year kind of numbers. For that scale and that size, it's a relative to India choice, but it is very good right now, I think.
Catch the whole interview on businesstoday.in and Business Today's YouTube channel. That's us in conversation with Samir Arora on the sectors that he likes, what strategy one should have pre-budget, as well as what he feels there's opportunity in later this year. No question of an import duty cut for Tesla. Elon Musk is more than welcome to manufacture cars in India. That's the clear-cut message coming from the highest levels of the Indian government in response to recent claims by the maverick Musk that there were challenges in launching Tesla's electric vehicles in India. This even as several Indian states take to Twitter to try and woo the company to set up operations here. Here's more on that story.
The message is loud and clear, and it is something that the maverick founder of Tesla is not happy with. while the January 13th tweet to his over 70.5 million followers claimed that Tesla was still working through a lot of challenges with the government to launch his highly successful but extremely expensive cars to India, the central government remains firm that it will not bow down to his pressure and make a policy exception for the American firm. On its part, Tesla is of the view that an effective import tariff of 110% on vehicles with customs value above $40,000 was prohibitive for zero-emission vehicles. The company had sought the duty be cut to 40%, irrespective of the retail price of the car, and withdraw the social welfare surcharge of 10% on electric cars. Clearly, the Indian government is not buying this line of argument, as it does not offer any concessions to any other foreign auto firm and does not want Tesla to sell made-in-China cars in India. Union Road Transport and Highways Minister Nitin Gadkari had made the government's stance clear last October.
आपको टेस्ला की कीमत ज़्यादा नहीं है और उसका कॉस्टिंग भी कम है और इंडिया में हमारे जो वेंडर्स हैं वो पूरा टेस्ला को दे सकते हैं मटेरियल। अब थोड़ा सा एक मेरे मन की बात है जो मैंने टेस्ला को बार बार कही कि चाइना में बनाकर हिंदुस्तान में बेचने वाला काम मत करो। हिंदुस्तान में आओ, हमको मदद करते हैं, यहाँ हमारे वेंडर्स हैं, हमारे यहाँ बनाओ, हमारे यहाँ बेचो, हमारे यहाँ से एक्सपोर्ट करो। जो मदद चाहिए आपको हमारी सरकार करेगी।
While many non-BJP ruled states including Telangana, West Bengal, Tamil Nadu and even Punjab Congress leader Navjot Singh Sidhu have taken to Twitter to woo Tesla, the fact is that customs duty on imports is an exclusive power that vests with the central government. Officials pointed out that Prime Minister Narendra Modi had himself visited Tesla facilities in the US as way back as 2015. And the company was more than welcome to take the benefit of a recently introduced production-linked incentive scheme for automakers by the central government. And while the non-BJP ruled states try and extract political mileage from Tesla's tweets, there is another recent incident that may be behind why Musk is talking about so-called challenges in India. Recently, Starlink, a division of his aerospace company, SpaceX, ran afoul of telecom regulations in India. With Chetan Bhutani in Delhi, Bureau Report, Business Today Television.
The electric two-wheeler space is heating up with startups and traditional automotive companies launching products. Hero MotoCorp, whose first EV may hit the market soon, is investing 420 crore rupees in EV startup Arthur Energy. News of the investment led to a near 6% rally in the stock. This is the fifth round of investment by Hero in Arthur, where it already held a 34.8% stake. Post the latest investment, the shareholding will increase and will be determined upon completion of capital raise by Arthur. That's what Hero said in a regulatory filing. Hero is also exploring collaborations with Arthur in areas such as charging infrastructure, technology and sourcing. Metro Brands hit upper circuit today following a strong performance in the December quarter earnings. The footwear retail chain reported a 54.63% jump in consolidated net profit to 100.85 crore rupees. Rakesh Jhunjhunwala-backed company was listed on December 22nd. We spoke to Metro Brands CEO Nissan Joseph, who said it was the best quarterly revenue, EBITDA and PAT in the history of the company. Additionally, we spoke about Metro Brands' strategic partnership with the Canadian well-being footwear brand FitFlop for the Indian market. Listen in to a short excerpt of this conversation. So do you think perhaps, Mr. Joseph, the market's not fully factoring in the kind of growth that you are possibly going to see from revenue streams like e-commerce?
So I think our history speaks for itself. Our financial discipline speaks for itself. Even through COVID times, we were one of the few companies to post a positive PAT, right? So when you look at those factors, we would like to believe that we would be evaluated and recommended on the way we've performed for the last 10 years, our discipline, our organizational rigor, our structures that we have in place, the professional management team that runs the operation. I would like to believe that all these factors are what's important for the growth and the future of the company.
And what about margins? Do you see further improvement? You're already seeing a pretty decent margin trajectory, but how will that improve going forward?
Yeah, so we did see probably one of our highest gross margins this quarter in the history of Metro Brands. We don't know if that's totally sustainable. Well, it is a little bit of a fictitious number because Q3 is not the EOSS month. You know, when we use the EOSS sales, which happens in Q4, to liquidate our old product, right? So, but the one thing we have seen also is that our sales of brands, our owned brands, went up by 300 basis points from 70% to 73%. And of course, you know, we enjoy good margins on our own home brands. So that has helped, but we also see it being equalized as it comes through. But the bottom line is, for the year, we anticipate that, you know, these margin trends of being better than ever before or better than we've had will definitely continue, and we have that financial rigor. Of course, we have some headwinds out there that come with you know, the COVID situation, that it's unpredictable what happens there. But I also believe that we've been able to mitigate some of our inventory issues and price increases by you know, supply chain issues, by making sure we have done enough forward-looking stock purchases, so we'll be equipped to take advantage of the sales that come. All this, along with cost-saving measures that we put into place, definitely starts to flow through to the bottom line. So your gross margins improving, your cost measures kicking in. It's a good combination.
Prime Minister Narendra Modi delivered a State of the World special address at the World Economic Forum's virtual summit, Davos Agenda. Listen into a short excerpt from his speech.
आज भारत ईज ऑफ डूइंग बिजनेस को बढ़ावा दे रहा है, सरकार के दखल को कम कर रहा है। भारत ने अपने कॉरपोरेट टैक्स रेट्स को सिंप्लीफाई करके, कम करके उसे दुनिया में मोस्ट कॉम्पिटिटिव बनाया है। हम अनेक देशों के साथ फ्री ट्रेड एग्रीमेंट के रास्ते बना रहे हैं। भारतीयों में इनोवेशन की, नई टेक्नोलॉजी को एडॉप्ट करने की जो क्षमता है, एंटरप्रेन्योरशिप की जो स्पिरिट है, वो हमारे हर ग्लोबल पार्टनर को नई ऊर्जा दे सकती है। इसलिए भारत में इन्वेस्टमेंट का ये सबसे बेस्ट टाइम है। कुछ और चुनौतियों के प्रति सचेत करना भी भारत अपना दायित्व समझता है। ये सप्लाई चेन के डिसरप्शन, इन्फ्लेशन और क्लाइमेट चेंज इन्हीं के उदाहरण हैं। एक और उदाहरण है क्रिप्टो करेंसी का। जिस तरह की टेक्नोलॉजी इससे जुड़ी है, उसमें किसी एक देश द्वारा लिए गए फैसले इसकी चुनौतियों से निपटने में अपर्याप्त होंगे। हमें एक समान सोच रखनी होगी। लेकिन आज वैश्विक परिदृश्य को देखते हुए सवाल ये भी है कि मल्टीलेटरल ऑर्गेनाइजेशंस नए वर्ल्ड ऑर्डर और नई चुनौतियों के निपटने के लिए तैयार है क्या?
That's where we leave it on the show today. Thanks so much for watching.